From the Lineweaver Wealth Watch Center, this is the Financial Quarterback.
I'm Jim Lineweaver, your financial quarterback since 1993. It may seem a little early to consider tax time, but the last quarter of the year is the best time to do it. After the year turns over, there's not much you can do. So here with some planning tips for the last quarter of the year is Mark Sipos, the director of LFG Tax. So Mark, where should we get started?
We should start by looking at all our income and deductions so far year to date. And now's a great time to do that, so we have plenty of time to execute. So businesses and individuals may want to take a look at either accelerating or decelerating income at the end of the year, and the same with deductions.
And this is a good time of the year to consider tax loss harvesting on your investments. While we still have a lot of the year left, and it's not necessarily clear where your portfolio will end up, beginning the review and planning process now is really going to help pay dividends later.
It's a great time to look at your 401k, 403b, and 457 plans and see if we can maximize those. You know, a lot of companies give you a holiday bonus at the end of the year or a year-end sales bonus. It's a great time to maybe fund those fully. Same with your HSAs and your flexible savings accounts, your IRAs, and if you're self-employed, look at your SEP IRAs, simple, and also a cash balance plan to help get that income down.
And by the same token, this is a good time to keep your distributions in mind as well as your contributions. If you turn 73 this year, you'll want to make sure you have a plan in place because you'll be required to take minimum distributions starting in April of next year.
And you can offset or eliminate even that required minimum distribution by using a qualified charitable deduction or a QCD, where the money goes straight from your IRA to your favorite charity and you don't have to pay tax on that required minimum distribution.
Yeah, and this is a good time to consider a backdoor Roth or actually even Roth conversions.
It is, but you want to be careful with the conversions because that could put you in a higher tax bracket. It could make your Medicare premiums go up, or you could lose the long-term capital gains tax advantage. So it's careful to see how much income that'll be.
That's a good idea. We talked a little bit about strategies for business owners, but we should also mention that that's a good time of the year for them to make major business purchases to also get some tax write-offs.
Yeah, if you need to upgrade some equipment, this is a good time to plan for that. And you could actually write that off all in 1 year if you so elect to do so. And also, you want to take a look at your inventory, see if there's any obsolete items we can write off, and go through those accounts receivable and see if there's any bad debts that we can write off.
Oh, great information. So as you can see, there's a lot to consider when it comes to the year-end tax planning. It may seem early, but this is the best time of the year to plan for next year's questions. So if you have questions about your tax planning for the end of the year, especially in terms of helping make sure your tax and financial planning work together and they're well coordinated, give us a call. We're always here to help. Stay tuned for Fox News Sunday.